Joining me right now, Republican Congressman from Minnesota, a state that has a lot of taxes, high-income taxes. He's a member of the House Ways and Means Committee. Representative Eric Paulsen. Representative, good to have you here. Where do you come out on this? And just to back up for a second, to explain to the viewer, you come from a state where you have high-income taxes, anywhere from 5 to nearly 10%. The way it works is in Minnesota, when you get your federal income tax bill, you can deduct what you're paying to the state of Minnesota. Now, you can't do that in Texas. You can't do that in New Hampshire. You can't do that in Florida because they don't have income taxes. So my point is, you guys are getting a little bit of a handout from all the other states. You're able to make your state run at the expense of other states. Do you think that that needs to change?
Well, a couple of things. First of all, I'm really excited about this tax reform plan as it's been laid out. As you know, we're lowering the brackets for everyone. So this is not about increasing taxes, even if some deductions go away. And we don't have the final details. There are some high state taxes that are concerned about this. But when you double the standard deduction, when you lower rates for everybody,
no, but New York is concerned about this, right? I mean, Peter King came out and said he doesn't like this one bit, the congressman from New York. You know Chuck Schumer's not going to like it anyway. But the reason someone like Peter King doesn't like it is because he knows he's got people here that are getting hit with 9% from New York State. They're getting hit with another 4%, say, in New York City. So you're looking at 13%. Well, New Yorkers can deduct that 13%, say, from whatever they're paying. Call it 35% to the federal government. So that's an advantage. And that money goes to help New York, just like that money goes to help Minnesota. Does that need to change so that you level the playing field for every state?
Leveling the playing field is a good idea. It's one of the reasons why we're just looking at a simpler tax plan here. I mean, why should 9 of 10 Americans have to hire someone to do their taxes, buy the financial software to do their taxes?
Okay, I agree with you on that, but that's not the question I'm asking, sir. The question I'm asking is, do you think that people should be able to deduct state and local taxes from their federal tax bill?
Well, right now, the plan that we've laid out in the framework, we are eliminating that deduction. But we also double the standard deduction, and we're actually going to level the playing field.
So you don't think that they should be able to do that?
Well, again, we're doubling the standard deduction. We're leveling the playing field, so states like that would be in a different position. But
what happens to Minnesota?
As long as we're not raising taxes on folks, well, as long as we're not raising taxes on folks, I think that's what we want to make sure happens.
Well, you know, you might be. I mean, especially on the wealthy. But by the way, this plays to your argument, because you get Chuck Schumer and company out there saying, oh, this is a handout to the wealthy. I'm telling you, it's actually not. It's not.
No,
in fact, someone who is a high earner in New York City, and by the way, you know, a high earner in New York City is very different than a high earner in Minneapolis or in Minnesota. I would say that because you've got a whole different cost structure. A high earner in New York City is not really necessarily a high earner anywhere else in the country. But that said, those high earners in New York will get penalized by this. I'm saying, you know, maybe that's right, because the rest of the country shouldn't be subsidizing. What are you saying? Because they will see their taxes go up, at least a point or two, Congressman.
Yeah, and it's not necessarily guaranteed they will see their individual taxes go up, because once you also lower the rates, that's intended to mask over any changes in deductions. We're also consolidating a lot of education credits into one simpler education credit, keeping charitable deductions, maybe even applying some other opportunities for low-income givers,
because you're working on this legislation, what would you like to see be the top rate, the middle rate, and the bottom rate for income? How much do you need to earn up to in each category?
Yep. So the brackets have not been set, but it's very clear. We're also going down to 0%. Yep. So 35%, and then you go down to a lower rate, you get down to 12%.
Yeah,
so
the question everybody wants to know, and I hope you guys come up with this one soon, is what are the income levels in each of those brackets?
Yeah, well, and that's where we're getting feedback on right now. So those will get designed to make sure that we're not increasing taxes on folks. We're actually going to be lowering it. And that's important for small business owners.
But I'm telling you, if you're in that 35% category, you probably are going to see an increase, Congressman, because you're not going to be allowed to deduct property taxes. You're not going to be allowed to deduct state taxes. You're not going to be allowed to deduct municipal taxes. In other words,
that's actually not the case. Yeah, that's actually not the case, because even when those rates are lowered, even if you lose a certain deduction, when you lower those rates and the standard deductions being doubled, we're designing this so you're not going to have your taxes going up. That's what we look at, and that's important for middle-income Americans.
But again, I'm talking about specific places like, you know, the West Coast, and these are blue states, by the way.
Yeah.
So I do think it's not fair that some of the red states, like Texas and Florida, are supplementing
Sure.
these blue states. That said, you're incorrect, however, Congressman, when you say that people will not see their tax rate go up. I think that people that are in that upper middle income bracket in New York City, if they're in that 35%, at some level you will, because you won't be able to get those standard deductions. You won't qualify for those. You're paying 35%, plus you'll pay 11, plus you'll pay 4. Anyway, like I said, I'm going to go back to the original premise, which that probably makes sense, because as I quoted Warren Buffett in the beginning, we're going to start to see which states have a handle on their economies and which do not. And, you know, Texas and Florida and New Hampshire and Nevada, good for them for 0% income tax.
And other
Paulsen,
states compete for that business.
Indeed. I'm all about free markets and competition. Thank you so much.